Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast, and this is episode number 7 of the podcast. I hope you guys are doing great and I hope you guys had a good previous week that went by. But now let's talk about what is going to happen in the coming week. Starting off with how the US unemployment can rise very fast in the coming few months, and then what you can expect from the FOMC meeting minutes that are going to come out in the coming week. And then I'm also going to tell you in which direction can the market move in the coming week as Nifty has touched 24,000. So should there be a profit booking or should we expect more rally in the market, right? And in the end of every episode, as you know, I teach you one concept which helps you become a better trader or an investor, right? So stay tuned till the end because you're going to learn a lot from this episode, and you're also going to get a lot of knowledge. But yes, without any further delay, let's just start with the episode. Now, starting off with what happened in the previous week, we saw the GDP data coming out for US, which came out at 1.4%, 0.1% higher than the expectations. So, a bit of a better GDP data, but still very less than the 3.6% that we saw just a few months ago, right? But then we saw the PCE price index, which came out at 2.6%, as same as expectations. So 0.2% lesser than the previous month. So it looks like the PCE price index is coming down a little bit. That means PCE inflation is coming down a little bit. Personal consumption expenditure, but I would give it a little bit more time. I would not just see 1 month's data and make a lot of very hard conclusions about where it is going. So we'll again take a look at it in the coming months also. We'll keep a very close eye on it. But anyways, not a lot happening in the coming not in the coming, but in the previous week that went by. So a very quiet week, you can say. But since a lot of it, not a lot of things happened in the previous week, I'm going to show you one data point which is a very interesting data point about the US unemployment rate, right? And I'm going to show you one picture right now which you can see right now on your screens, and this is a picture where you can see the US unemployment rate and the 36-month average of it, right? So the orange line indicates the 36-month average and the white line indicates the US unemployment rate. And if you see, whenever the US unemployment rate has crossed the 36-month average from the bottom, right? So it has gone from from going from the bottom to higher levels. If you see, whenever it has crossed its 36-month average, it has resulted into a very big spike in the US unemployment rate, right? And that's how I've marked, if you see, with circles everywhere wherever the US unemployment rate has crossed its 36-month average. If you see, there has been a very good spike every time, and this is the data since the last 70 years, right? If you see, because that is the data that I could get, before that there wasn't really a lot of data. So since the last 70 years, if you see, every time the US unemployment rate has crossed its 36-month average, we've seen a very, very big spike in the US unemployment, right? And this time, if you see, the May unemployment rate has crossed the 36-month average, with the May unemployment rate coming at 4% and the 36-month average being at 3.9%. So does this indicate that are we looking at a very big unemployment rate spike in the coming months? Because again, a lot of indicators, a lot of economic indicators, other indicators are also indicating a bit of a slowdown in the economy, a bit of a, you can say, a slowdown in everything basically, not except for inflation. Inflation is not coming down. I mean, it is showing a bit of signs, but I would say not a lot of signs, right? So are we expecting a very good spike in the unemployment rate in the coming months, or a very sharp rise? Because if that happens, it will not be very good for the markets. And I had said that there will be a bit more rally, and then by the end of this year, we don't really expect a lot of markets being, or the economy being, in a very good state. So again, I stand by that. If you go into the previous episodes, I've said that by the end of this year, we may not be in such a good state in terms of where the economy is heading. So in the next few months, we'll need to keep a very, very close eye on the US unemployment rate, because this is the thing that if it starts to rise, it is one of the very, you can say, reliable indicators of how the economy is doing. US unemployment rate, is a very reliable indicator in my opinion also, because I also really look I also keep a very close eye on where the US unemployment rate is heading, right? So yes, definitely we'll keep an eye on that. And the next week also we have the US unemployment rate data coming out for the month of June, so we'll take a look at that also. But yes, that was it for this week. Nothing much happening, a very quiet week. So let's move on to what is going to happen in the coming week and what you can expect from it. Now, talking about what is going to happen in the next week, starting off on Tuesday, where Jerome Powell has a speech. Now, I don't think there will be much of a very interesting thing that he would say, or anything which is out of the box, which is a bit surprising. I think that is something that we might see on Wednesday, not on Tuesday. So, on Tuesday, we have the Jerome Powell speech, but I don't think it will be very important. But still, you should keep an eye out on it, just in case Jerome Powell says something which might be interesting or which might be a little bit out of the box. But then on Wednesday, we have the FOMC meeting minutes. Now, the FOMC meeting minutes are going to be a bit important this time around. I need to look out for it because the PC price index data that I told you, which came out the previous week, it has started to show signs of slowing down, right? And it is sort of close to inflation data also. So it is sort of saying that the inflation might start to come down a little bit. Now, if that happens, if we are looking at a bit of a slowdown in inflation, we might soon see rate cuts in the near the end of the year, maybe in the September meeting or in the December meeting. Somewhere close to that, we might see rate cuts coming into the market, right? So keep an eye out on that. Keep an eye out on FOMC meeting minutes, especially for the comments on the inflation and the PCE data. And then, is the Fed ready to cut rates? Now, if the Fed starts to cut rates, it will not be actually good for the markets. Now, why do I say so? Is because, when do you cut rates? Tell me. You cut rates when you feel like the economy has started to slow down very much, right? So you cut rates, that means liquidity will start flowing into the market, people will borrow more money, there will be more business happening overall, right? So if the Fed feels like the economy is slowing down and they start cutting rates, that means the economy is not doing so well, right? And that is what the market will take into account, and markets may start seeing a sell off after the rate cuts. You might think that, after the rate cuts, the market will start to go up, but that is not how it might work. It might actually be the case that the market start coming down after the rate cuts, or once the rate cuts are started to start to factor in. So again, keep an eye out on FOMC meeting minutes and what are the major key points. We'll also talk about that in the next week's episode, but still, if you want to keep an eye out on that before itself, just to look at what are the major interesting data points. And then on Friday, we have the US unemployment rate for the month of June. Now, for the month of May, as I said just a few minutes ago, that the US, the month of the unemployment rate for the month of May has crossed its 36-month average. And whenever that happens in history, in the last 70 years, whenever that has happened, the US unemployment rate starts to rise sharply in the coming months. So, if unemployment rate goes out of hand, you can be rest assured that the market will not like it, and we could see a very brutal sell-off also. So keep an eye out on unemployment rate. I think expectations are that the unemployment rate will be the same, that is at 4%, but I have a feeling that we might see a bit of a bump, maybe 4.1, 4.2%, not much. At least as of now, we might see a bit of acceleration in the unemployment rate afterwards, maybe a couple of months later. But as of now, we might see a little bit of a bump, a little bit higher than expectations unemployment rate. But still, even if it comes down at 3.9, 3.8%, that will be good for the markets, at least in the short term. But yes, next few months unemployment rate will be one of the major things that needs to be kept an eye on. So now that was it for what you can expect in the next week and what are the major events. Now let's move on to what are the IPOs that are coming in the Indian markets and should you apply to them or not. Now for the next week, we have two IPOs coming in our market, starting off with MQR Pharmaceuticals and then Bansal Wire. Both of these IPOs are going to get opened on July 3rd and going to close on July 5th. So should you apply in those IPOs? Now let's first talk about from the listing gains perspective, because that is what most people are interested in, to understand are we going to get good listing gains or not. So for Bansal Wire, the listing gains now as of Saturday is being shown at 20%. So only 20% grey market premium, and for MCure it is at 27%. So both of these IPOs from the listing gains perspective itself are not that lucrative. So if this is a bit of a, you can say, a rule that you can follow, is that only apply in IPOs which have higher than 50% grey market premium, right? So what this does is that even if the IPO opens lesser than the grey market premium, which is the case most of the times with most of the IPOs, is that they open a bit lower than what the grey market premium is suggesting. So you still have a lot of cushion left on the on the downside if, let's say, the grey market premium is shown at 50%, but still if the IPO even opens at 30%, you are not going into a loss and you're still getting a good amount of return, actually a very good amount of return. If you are getting 30% on your capital invested in just a few days, in a week, right, that is actually a very, very good returns. So as of now, grey market premium for both of these is not that lucrative. 20%, 27%, not that great. So what you guys can do is that, let's say, by 5th July, if the IPO premium, the grey market premium goes up till 50%, or let's say even above 40%, leave 50%, even above 40%, then it is a bit of a lucrative bet to take, right? For both MQR and Bansal, then you can think about taking this IPO for the listing gains perspective. But until now, as of now, it doesn't look like it is a good IPO in terms of just the listing gains perspective. Now for the fundamental perspective, let's first talk about Bansal Wire. Now Bansal Wire, if you see, what this does is that it makes steel wires, right? So now this area, this sector in whole, is a bit of a you can say a very competitive sector, because again, at the end of the day, it is just wire, right? If you make a wire from one person or another person, it is going to do the same stuff. Sure, there might be a bit of a quality differences, but end of the day, it is sort of like a commodity, right? Because at the end of the day, you're only going to get a wire, right? So it is a bit of a competitive sector, in my opinion. And but still, if you see, the company has been a bit, you can say the company has a good amount of steady returns that it is generating. So if you see the revenue in FY24, 2,470, in FY22, 2,200. So just a 10% increase in revenue, but still it is a bit of a, you can say, a solid revenue growth. You can say not a solid, but a steady revenue growth is what I would like to say. On the profit side, if you see, they've made 57 crore profit in FY22. In FY23, it went up to 60 crores, and in FY24, it is at 78 crores. So very good profit jump. Now, one thing that you should keep in mind is that the IPO proceeds that they are going to get are going to use to be, they are going to use it to repay debt. Now they have a debt of 680 crores, and they are raising, they are raising 745 crores, right? So even if they, let's say, use 50% of that to reduce their debt, so 50%, let's say 300 crores to reduce their debt will come down at 381 crores, right? Let's just say 400 crores, right? So if that happens, then they might see a very good increase in their profit after tax, because the interest part that they are paying from their revenue, that will get decreased, and that can really increase their bottom line or profit after tax, which can definitely help improve the net profitability of the company. So for the long term, it is, you can say, a good enough company. The IPO in itself is not like a very attractively priced IPO. It is a bit on the expensive side, right? So what you can do is invest a small amount after the IPO is listed, right? Now yes, it might get listed on a bit of a premium. So what you can do is you can apply in the IPO and then sell off most of your shares and hold a little quantity in terms of you can say investment perspective. And then if the IPO comes down, if if the share corrects after the listing, then you can think about buying at lower levels, right? So the IPO is going at 243 to 256 rupees. So if let's say you are buying, you'll get the shares at 256 rupees, right? So you can think about buying the shares at 220, 210, 200 rupees, right? If it comes over there, and then you can apply in the IPO and sell off most of your shares in profit, in a little profit, very little profit, I think, at the day of the listing. But keep in mind that the GMP is just 20%, so it might even open flat or a little bit negative. Keep that in mind, and so you should not get stuck on that. So better to not apply this IPO in terms of you can say in terms of fundamentals. But if you have a very big portfolio, let's say a 10 lakh rupees portfolio, and then you are applying for this IPO, maybe one or two lots, then it is fine. A small amount of your portfolio can be applied, can be invested in this company. It is that good enough of a company. But I feel like the IPO is a bit overpriced. You can, if you can get the price, if you can get the IPO, sorry, or the share at a bit of a lower levels, somewhere near 200, 210, that will be a very good price to pay for this company, because the growth is also pretty solid. And it looks like if they and they will also pay away their debt, a little bit of, let's say, a part of their debt also, then it can definitely increase their profitability, net profitability. So that is for Bansal Wire. Now talking about Emcure Pharma. Right now, Emcure Pharmaceuticals, it is a very, very, you can say, a very good company in my opinion, because first of all, let's talk about how much they are raising and how much is going to go to the company, because it is a bit of a bummer, because they are raising 1,952 crores, but out of that, only 800 crores will go to the company, and the rest will be going to the promoters who are selling their shares. So a bit of a bummer. I would have preferred that they would have at least, let's say, raised 1,000 crores and then let the 800 crores go to the promoters. That would have been much, much better. But, can't do anything about that. That is what we are left with. So, now, Emcure Pharma is an Indian pharmaceutical company, and it makes a lot of pharmaceutical products, definitely a lot. And they have a very good presence in the export market also. And 50% of their sales are coming from India, right? And out of that, the other half is coming out of out of India, right? So this is a very good thing that they are an export company. And I really like companies which are exporting, because the government has they get a support from the government also. So they have they also do very good exports. And so if you look at the revenue, they have not grown very, very fast. If you see, in FY22, they had a revenue of 5,900 crore, in FY23, 6,000 crores, and in FY24, 6,700 crores. So not a very, very big increase in revenue. But if you see in profit after tax, they have actually seen a dip in FY24, right? So in FY23, they had a profit of 561 crores, and in FY24, they had a profit of 527 crores. Now, pharma companies, they've not been performing very, very good. Not just Emcure Pharma. You can talk about any pharma company. They haven't been performing very, very good, right? But again, Emcure Pharma is one of those companies that is a very, you can say, a solid company. It is not a bad company. They have a very diversified portfolio of the products also that they are selling. So, the issue pricing, the price at which the shares are being issued are also fine. They are not very expensive in my opinion. So a very, very good you can say company, a very good defensive company. It is not a very, like a very fast growth company which will grow at 25-30% or anything. But if you want a bit of a defensive company in your portfolio, which is going to help you reduce the beta of your portfolio, although I don't believe in beta and alpha and whatever, but which will help which can sort of be a steady growth company, then this is a very very good company. And as compared to Bansal Wire, I think Emcure Pharma is a better company to invest in just as of now, in terms of which IPO to apply. Let's say you have 15,000 and you have to choose from both IPOs, Bansal Wire or Emcure Pharma. I think if you invest in Emcure Pharma, that is a better company as compared to Bansal Wire, given the pricing and everything. So MK Pharma, from the fundamental perspective, a good company. Bansal Wire, it is a good company, but it is priced a bit higher, a bit more expensive. So if you do not apply in the IPO from the fundamental perspective, that is better. And if you apply only if you have a very big portfolio and then you are applying uh, maybe 2-3% of your portfolio is in this company, that is fine. Then you can increase your stake in the company once it comes at lower levels, as I said. So that is it for the IPOs. Now let's move on to the market analysis for the next week. So now talking about the market analysis for next week. This week, if you see, Nifty moved up 2%, Bank Nifty moved up a little less at 1.3%. So what can we expect for next week is a little bit of profit booking. Now why do I say so is because the US markets, if you see, Dow Jones hasn't closed very well over here. Now Dow Jones, I'll open the, yes. If we see Dow Jones hasn't closed very well, it looks like Dow Jones might give you one move on the downside and then it might start to move. And same thing for Nasdaq also, if you see, just not a very good candle at the top, and same for S&P also. So what can we do for next week is a little bit of profit booking. Now our target of 24,000 has been hit. Nifty has closed at 24,010. So our target of 24,000 is done. I had said this over here, right over here, as I said, that if we close about 20 to 600, we'll see a target of 24,000, and hopefully you would have made a lot of money. But yes, what can we do now is a little bit of profit booking, at least until 23,800 in Nifty, and in Bank Nifty near 51,700 to 51,500, right? So what we will do is not sell at lower levels, rather sell, wait for a rise in the market and then take a selling position, right? So what you can do in Nifty, Bank Nifty, is going to be very simple. Now the important level to watch out for will be 52,700 to 52,800. In this range, if we get the market, let's say the market opens with a little bit of gap up somewhere near 50 to 500, goes up till 52,700 to 800, you'll then again think about taking a selling position from this level. Now this is a short term, you can say, correction that will happen in the market. Please do not think that the market will crash from here. We again, that is not going to happen very fast. We again, even if that happens, we will get to know that. And again, watch my videos every day that I post about the market analysis, so you guys can get a little bit of understanding of what can happen in the market every day, right? So for Nifty, at higher levels, somewhere near 24,100, we'll think about taking a selling position. If I go into the 15-minute chart and show you guys, exactly 24,100 to 140 is the range that you need to think about, where you can think about taking a selling position in the market. Again, you can think about target of 24,000, which will be a bit of a fast target, but then you can also think about taking a target till 23,840 easily on the downside. So this week, at least in the first half, we will think about a selling at rise stance. We will take a selling at rise stance, and then in the second half of the week, if we see a little bit of recovery, then we will again go bullish. But yes, in the first half, if we see again, if you see, pros have also reduced their long position. They had 3 lakh long over here, now they've come in 2 lakh short. So they've also started to make short positions, so it looks like we might see a little bit of a move on the downside. Now the important level in Bank Nifty is 52,000. If 52,000 is broken, or more importantly, if 51,700 is broken, then we might stay in a range for a while and then break out on the upside. So then we might see a bit of a consolidating move for a few months, you can say, not a few months but a few weeks, and then we might see a move on the upside or on the downside, again a trending move. And for Nifty, the important level is 23,800. If we go below 23,800, then we might see a consolidation for a while and then an up move or a down move, depending on where the market moves, right? So important levels, as I've said, you can mark those on your charts also. 15,700, 15,800 also is fine. That is the most important level. If that breaks, then we will see a consolidating move in Bank Nifty, and then for a while we can see a consolidation in Nifty also. So very clear. In the first half of the week, we'll take a sell on rise stance, and in the second half of the week, if the market tells us that it has done its correction, then we will think about buying again. But yes, as I said, in the first half, a sell on rise stance. Now, the concept that we're going to learn today is known as hostile takeover. So, what a hostile takeover is that there is a company, let's say company A, which is interested in buying company B or having a majority stake in company B so that it can make big decisions in the company, right? But company B's board of directors are not interested or do not want company A to have a majority stake or, have an ownership in company B. But still, if the company A starts buying shares or starts to get more ownership of company B from different avenues, let's say company A starts to buy shares of company B from the open market, or they buy the shares of company B from some big investor who's already invested in company B. So they start increasing their ownership in company B without the consent of the board of directors of company B. And we are talking about ownership which can, a majority ownership, let's say buying 40% of the shares of company B, right, or 51% shares of the company B, so that they can have the majority stake in the company, right? So this is known as a hostile takeover. When a company wants to starts taking ownership of another company through different avenues without the consent of the board of directors of the other company, right? And this is so the hostile, in the word hostile takeover, comes from the fact that the company B does not approve of this takeover that the company A is doing by buying more shares, right? And even if they have, let's say, 25% shares of the company B, right, they can still make very large decisions in company B. So this is what a hostile takeover is. Now, is this legal? Can anyone do it? Yes, it is legal. It is not an illegal thing to do, because anyone can go ahead and buy shares of any company, right? There is no problem in that. So hostile takeovers are legal, but there is a problem, and that is regulations. A lot of regulations come into place when a company tries to acquire a big stake in another company. Like the Competition Commission of India, they will stop and evaluate the whole scene and look, is it a good thing that company A is acquiring company B, or company A is starting to buy a very big stake in company B. Then SEBI will come into the play, and then there are many different sort of regulatory bodies which will keep an eye on you, and you will need to get their approval also, so that you can go ahead and keep on increasing your stake in the company which is being targeted or which you want to buy. So it is legal, but it is a bit of a hassle. It has a lot of hassle in it. So one of the very recent examples that you can think about is of Dabur acquiring Religer Enterprises. Now, Religer Enterprises is a financial NBFC, you can say. So Dabur has increased their stake in Religer Enterprises from 10% in, I think, 2018 to now 25%, more than 25% as of 2023. So they are slowly increasing their stake, and because of this, the board of directors have been fighting a lot, going to different regulatory bodies saying that this is not fair, this is not right, Dabur is doing unfair practices and all that stuff. But the regulatory bodies have said to the board of directors of Religer Enterprises that there is nothing wrong with Dabur doing, buying more stake in Religer Enterprises. Now, one more thing with hostile takeovers in India is that whenever you have a very big stake in a company, let's say 25% stake, right? Now, if thus, let's say you are acquiring stake at a very fast pace, so there are small investors who are stuck in the company. Like let's say I believed in the board of directors of Religer Enterprises, right? So I believed that they could, take the company to new heights. They can really grow the company. But now I see that Dabur is coming in, and I do not believe that Dabur can, operate the company in a very well manner, right? So what Dabur has to do is that it needs to actually put out an offer to buy the shares of these small investors so that they can get an exit, right? Because they believed in the management of Religare's management, right? But now if Dabur has a majority stake, it will come into play, and it will also put its own people in the board of directors, right? So if I do not believe that Dabur is the one who is fit to operate the company, then I should get an exit also, right? Because now I do not have an exit. So what Dabur has to do is that it needs to put out an offer to buy the shares of the small investors so that they can get an exit. And so this is also one more thing which you'll see in hostile takeovers, is that the company which is acquiring the shares, which is trying to take over the other company, will also float a sort of, you can say, an offer to buy your shares, so that it can increase its ownership and you can get an exit. Now this is a good thing, so that the retail investors can also be protected. Let's say they also have a chance to exit the company. Sure, they can exit in the open market also, but let's say the open market price is lower than you bought it, right? So what do you do then, right? Or let's say you cannot exit in the open market due to any reason, so then you should also get a chance to exit. And so this is why the acquiring company has to do an offer to buy your shares from the retail investors, basically buy shares from the retail investors. This is a mandatory thing. So I hope you guys understood what a hostile takeover is. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate that you stayed till the end. But yes, that was it for this episode, and I hope you guys liked this episode. I hope you guys took some very good information from this episode, and I hope your time was not wasted by listening this episode. And if there is anything that you want to be improved, that you want improved in this podcast, or if there is anything that you want added in this podcast, do let me know in the comment section. I will definitely make sure that it is added soon to the podcast so that you guys can get more value. But yeah, that was it for this week, and I'll see you guys in the next week. Stay safe, have a great time. Bye bye.